A very good evening to all our mentorship traders. We are on the Friday, 5th of November 2021, a little past 8 p.m. Indian Standard Time. We'll take a look at the index, the Indian markets from a weekly perspective first, and then we'll discuss about few trading investment opportunities we can look for next week. It was a truncated week for us. First, let's take a look at the daily charts, and do keep in mind that the last candlestick over here, the tiny one with such low volumes, is the 1 hour Muhurat trading that happened yesterday evening. So we need to discount this price and its the indicators which are derived from it. So we need to keep this in mind, at least for the next few days, so that after 10-15 days, this value will get averaged out. So where are we? We closed at 17,916, a little above that 17,900 mark. We are consolidating for 3 sessions now. 1, 2, 3. I will not call this a fourth session. 3 sessions. Essentially, this consolidation is supposed this big 293 points run, but a much more better, clearer picture I think we can get from this 75-minute time frame. Okay. On the downside, supports of 650, 750, which we had marked here, it held, gave us a 293 points one-day bounce back. We spoke about 18K as a psychological level, price-wise, VWAP-wise, volume profile-wise. 18K all the way towards 18,100, 150 was a nice band that we have drawn here, and we are expecting resistances up in this zone. And the market did deliver resistance. In fact, since then, the index has come off in a little complex manner, 1, 2, 3 kind of a manner. Discounting these 2 bars, which was your motor trading, we had come down all the way down towards the 17,770, and then we had a pretty decent sharp bounce back. This was Wednesday's trade. So 650, 750 would stay as a support. It has held well, has proven itself. If we see a break of this zone, then definitely 350, 450. There's no doubt about it. But let's not jump into such a conclusion. The index needs to show a little bit of more strength. It gained a bit on motor trading, and we will see how it opens on Monday and how it behaves. But I feel that there can be an attempt from the index to try and break above and probably retest the 18K. Maybe. This is primarily because of the long-legged lower shadows that we have here based on the bounce back, and some little price-wise gains that we had yesterday's motor trading to fall back on. The trend is down. The short-term trend is definitely down. So 18K all the way towards 18,150 stays as a serious wall of resistances for the index. There's no need to be bullish or overly bullish right now. We can be a little bit cautiously bullish. We need not go short. The reason is we need not go short or go bearish is because the daily charts are still okay. The daily charts, the weekly charts, if we see, are pretty strong. They're holding pretty good. We've seen a beautiful rally, and now the index is essentially slowing down. We've got divergences kicking in over here in the weekly charts, which is playing out. So the overall picture, the broader, larger picture is still fine. It's still okay. There's no need to go outrightly bearish. But yes, it's important that we be a little careful. As you can see from this chart, it seems like 650, 750, 18,100 seems to be the range within which the index will try to stay. We have seen pretty decent movement, stock-wise, sector-wise movement that the market had offered, and I think one should keep an eye on that. One can continue to look for such opportunities. So I think we can keep a cautiously bullish approach. If you're looking to go short, then probably in the smaller time frames, don't hold on to your shorts for too long, because we're still in a nice bull market. So we'll look for maybe a month, 2 months back, the ease with which we used to get long trades very easily because the market was supportive. that ease probably has gone away. Now we need to probably work a little bit more. We need to spend a little bit more time on the charts and do a little bit more homework to get a good long trade. So it is still a trend, a phase, a state of the market where one can continue to look for long trades, but the effort that we need to put in is probably a little bit more. It's not going to come that easy. That's what I can share. Coming to the RRG charts, I'm here on stock charts. I've used the benchmark as Nifty. I'll use a tail length of around 12 weeks, giving me a quarter's time frame, 3 months. And all the sectors seems to be well positive, except we have pharma and metal. Okay, so metal's picking up a bit of relative strength momentum, and it's in the lagging quadrant, and pharma also in the lagging quadrant picking up momentum. So we can get some bounce backs, maybe short-term shallow bounce back from these two sectors. We'll take a look at these stocks a little later. But apart from that, all of them positive. All of them positive, led by real estate, still very much in the leading quadrant. Media, few selected stocks, doesn't matter too much, so we don't talk about media too much. I personally also don't focus too much on those media names. And then we have PSU banks. Interesting, we have got SBI there, Bank of Baroda, PNB performing really well. Energy, we've seen how ONGC, Reliance now cooling off, but has done pretty well. This is from a 3 months perspective. And the mid caps. Where is the small cap? I thought I had added the small cap here. PSU, auto, financials, bank nifty, consumer, private bank. Oh, there you are, small cap. Weakening. So this mid cap seems to be outperformed the small cap by a pretty wide margin in the last quarter. Interesting. And then we have auto. I always like the tails which are improving, the blue ones. So we have auto there. We have auto here. Very nice improving quadrant, pick up of momentum now. It should ideally give us some strength. But private banks, that's is very, very encouraging, because private banks add a lot of weightage to the market. We've got PSU Bank there as well. See, if you take a look at this RRG graph, this movement of the PSU Bank, then we can get some bit of clarity. That is, let me try and use this pen. See, from this is 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, around 8, 9 weeks back, around 2.5 months back, the PSU space wasn't doing much. It was actually in the lagging quadrant. And then around 2 months back, it started to pick up momentum, and it has now picked up very good momentum. Ideally, this is the flow of RRG charts. This is how RRG charts should ideally perform. So in these lines, this is how the pharma and the metals are placed, especially pharma is placed right now, because pharma has now room to gain some vertical distance, which means that it should pick up some momentum, which means that stocks which are at primary uptrends, strong uptrends, but gone through short-term corrections, now close to strong supports, those are the ones which should try to bounce back. Maybe first shallow bounce backs, but then try to pick up. So you can keep an eye on pharma. So auto is there, private banks, PSU banks, bank nifty is there. This is good news. This is not encouraging. This is not highly positive news, but this is encouraging news in the sense that from the improving quadrant, the route is towards leading. So that's there. Amongst the leaders which can slow down, real estate definitely stretched in terms of both strength and momentum can slow down. Energy is holding well, and mid caps are doing pretty good. We have some consumption, but I'm not too confident about the consumption space, considering recently how the FMCG, you see how from improving it just knocks a little bit leading and comes down all the way to lagging. This is, I think I have mentioned multiple times in our videos that the RRG charts are good. It gives us a definite kind of an understanding of the placement of the sectors, but they may not beautifully move clockwise like this. There can be short-term volatility in their movements also, like we see that in in FMCG, and that can definitely trickle down, and we can see similar kind of behavior in consumption. So let's come here. Let's take a look at SGX. As we discussed tonight, is at 17,987. That's not bad. 17,990 is very close to 18K, which is not bad. If we get even this kind of an open on Monday morning, then that would be somewhere close to this level, close to Wednesday's high. That's not bad news. All right, so let's take a look at the pharma name we were talking about from a slightly contrarian perspective. Would like to look at those stocks which are in a nice uptrend, at least let's say from the weekly perspective. Oro Pharma definitely doesn't qualify. Torrent Pharma, yes. Cipla, yes, but this is like a double topish, strong supports. We should mark these kind of zones for stocks as important as Cipla. Is a very important zone for Cipla, Torrent Pharma. These are all futures charts, so few stocks will have very limited data. So I will Alchem Labs. Now this is a good stock. This is a very nice trending counter. You should keep an eye on this. Cadila Healthcare also, though I feel that the degree of correction has been a little more extended, and this is what it is dealing with. A quick look at, I think, your anchored VWAP in a stock like Cadila. From this point, it must have been broken. Yes, very clearly. And let's say we deal with this point. So there you are. It's heading towards 472, 480, 82. So 475, 485 is not a bad zone. I'm talking few pharmaceutical names which are in a nice strong uptrend, are going through a short-term correction, can support the pharmaceuticals in the next few weeks or maybe months. So go with those stocks which are in a strong trend. We saw that in DV's lab. We saw that in Sun Pharma. Biocon, I would shy away from. Definitely not. Dr. Reddy can be tricky, so careful on that. And Lupin also is in a downtrend from the weekly perspective. So more keen on looking at strength. So Alchem, Cipla, Torrent Pharma, DV, Sun Pharma would be the names to look for. But these are all medium to slightly long-term perspective if the pharmaceutical starts to pick up, that is. Let's take a look at oil and gas and few power stocks. Now, I would like to take a look at BPCL from a short-term perspective, coming to the daily charts now. Not so strong, but in the sense, in terms of trend, not so strong, but now it's come close to some important, let's mark this, it's come close to some important levels, and you might start to see some divergences. Can you see these divergences kicking in? So important, these are counters which can give you a nice short-term bounce back early next week. IOC has already given us that move, and Hindpetro has already. So BPCL can be a follow-through candidate, though it's relatively weaker. ONGC is one stock which is in a nice uptrend, has gone through a multi-legged correction, is slowing down. So please keep a close look at ONGC. Early next week, we have Reliance also in the same category, creating an inside bar. Amongst the top traded stocks, these are the 17 names that we have here. On the last trading session, we had some movement coming in from ITC. Disclosure, I have a bull call spread running on ITC here. Apart from that, Larsen showed immense strength. Doesn't make sense to chase this. Sun Pharma and the others, as we discussed, are okay. Infosys, TCS can be interesting counters. They have slowed down. By the way, the inside bar, which I spoke about, Reliance, is primarily because of the motor trading. So you need to discount that sentence from my end. Another important counter would be Bharti. It came out its results. We've spoken about it many a times. I was hopeful of this breakout. It did inch above, but now it's come off. It will be extremely important for the stock next week, couple of weeks going forward, what it wants to do. And then we have iBank. We have Tata Steel. iBanking is a nice trend. Tata Steel is a little range bound. So mixed market behavior, because we can see sectors and stocks, the large caps, which are in a state where few are very strong in terms of trend and few are not. Let's keep the bias cautiously bullish, and if it follows through the way we're expecting on Monday morning, if it comes close to that 18K mark, then we have a chance that the index can show us some follow through movement on the upside. No particular reason to go bearish right now, but yes, if the index fails to take out 18K or 18,100, those can be better as levels. One can go for contra short, but till then, this is not the right time or place to create any bearish setup, bearish trade at this juncture, right? Okay, so that's the call on the overall markets. Let's start and discuss our stocks and trading ideas.